One of our next guests sees the S&P 500 falling next year with a target of 6,500. Joining us now, Steve Sosnick, chief strategist at Interactive Brokers, and Brij Khurana, Wellington Management fixed income portfolio manager. Great to have you both here on set. We have a full house. Steve, I'm going to start right there with you because you are a bit out of consensus here with what you expect for stocks next year. How much of this does hinge on what we are seeing right now in the bond market and as we do await a Fed decision?
A lot of it, Morgan, and part of it is because my target for the 10-year is around 445. And the reason I say that is I think we're going to move away a little bit from being concerned about inflation at the Fed level, and that will cause inflationary expectations to rise. At the same time, there's a lot of tricky precedents that happen in the mid-year election cycle. The last two of them have been actually the last two bear markets we've had in 15 years. We're in 2022 and 2018. Also, there's this uncanny coincidence that a new Fed chair tends to get a test early in his or her term. And so we have this confluence of the tricky second-year presidential cycle coinciding with a new Fed chair and one who is probably going to pay less attention to inflationary expectations at the expense of lower short-term rates, as Rick was alluding to. That's all getting priced in, and that's where I see a little bit of a possibility of a pullback, and just part of it is I'm a natural contrarian.
Brij, I want to get your thoughts on this, especially since you're the fixed income strategist here at the table. What's the bond market telling us, and where are we headed here? Yeah,
I think today's price action is actually quite interesting in that you had long-end yields staying relatively unchanged, but then the front-end yields are moving higher, as Rick was talking about. And I think there is this recognition that growth in the first half of next year is going to be quite strong. You have the fiscal stimulus from the One Big Beautiful Bill coming in. You have less tariff headwinds that we had for most of this year. And I think the bond market's dealing with the fact that we may not get as many cuts. I think they're going to cut tomorrow, but I think the Fed could even indicate tomorrow's meeting that they're not going to cut at all for next year. And so I think it's a very tricky environment next year where the first half of the year is very strong. But then the second half of the year, to Steve's point, you're going to be dealing with an election. And what comes if we do see a change in the House is going to be fiscal contraction in 27 and 28. And so when is the market going to front run those expectations? That's going to be tricky to time that. But I do think it could be next year will be the year of two halves, almost strong growth, stronger inflation in the first half. And then we're talking about weaker growth and almost disinflation in the second half.
When does the baton handoff happen between the first half and the second half based on what either companies are guiding or what economic indicators are indicating, or perhaps even what polls might show about how the midterms are likely to shape up?
That's really, it's sort of going to be a process. It's not going to, I wish I could say, wake up on March 1st and this is all going to happen.
I wish you could.
Now, I will say February 18, when we came into a situation like this, there was Volmageddon in 2018, which is one of the things that, as a long-term option trader, I can't get out of my head. But we have basically the situation where, I want to hear what the Mag 7 and friends say, starting this week, but really in January in terms of what their outlook is going to be about spending. Do we start to continue to see investors more concerned about return on investment than just the fact that that companies are investing in AI? The J.P. Morgan news, actually, their expenses are going up. I thought they're supposed to be getting more efficient from all this. So there are some issues here, and I think that's kind of the push-pull. And I think, that the timing of that, I wish I could sort of put a number on it. I think it's going to be a process, not necessarily a flip of the switch.